Hi, thanks for joining me again. I wasn't quite sure what to make a video about this time around, so I thought I'd show you my short chart, which I was only just looking at a little earlier, and it seemed like a good idea at the time. In front of you is my regular chart, and part of my trading strategy is to look for anomalies in the market. I look for swing trades that I can hold for weeks or months at a time and follow a trend for an extended period. And anomalies that I look for in particular when I'm first identifying a stock are narrow spread bars with high volume, particularly narrow spread down bars on high volume, as they generally suggest some form of buying. I'm looking for buying, I'm looking for accumulation, and then I jump on hoping to be swept along with the momentum in the market. One of the stocks I'm currently holding, I've been holding for a while, is this stock, WHC, and it's been trending higher for quite some time. I initially look for narrow spread down bars with high volume and periods of accumulation or bullish absorption. And you can see a period of bullish absorption has taken place through here. It's perhaps not a perfect example, but that's how I identified it at the time. Now, over a period of time doing this sort of thing, I built a chart using Microsoft Excel in an attempt to identify the use of short trading as an anomaly, in a similar way to identifying the anomalies of narrow spread down bars on high volume. I thought you could look for the footprints of the active professional traders in the market by looking for the use of daily short positions to moderate price movements. And the anomaly would be that short interest, that is, short positions that are held and not immediately covered, going down. So you would have the increased use of daily short positions, which is not reflected in those positions being held for any particular length of time. And overall, short interest is falling. That's an anomaly. So I went ahead and built this chart. Now, it started off a bit rough and ready, but over the years it's been developed so that now it's quite a good looking chart. I'll run through all the features shortly, but just to start with, it's a normal bar chart. It shows daily short positions, it shows normal volume, it shows short interest, that is, short positions being held. It also has a wave chart built in, and if you look carefully, the hollow part of a bar is representing a gap. So you can see where price has gapped up or gapped down. So just to run you through what's going on, these blue column bars are regular volume, and it includes Chi-X volume. And the red bars, the red column bars, are daily short positions, and they're pushing down because they're supply. And the daily short positions are relative to regular daily volume, so they use the same price scale, so they're directly comparable. The scale of the daily short positions are the same as the scale of the daily volume. In yellow, the area chart is short interest. These are shorts that are being held. You can see short interest is falling for the most part, but you can also see that the daily short positions have probably increased over what they were doing previously. Now that's an anomaly for me. Daily short positions are increasing, but short interest is falling. This is likely the use of short positions to moderate price movements, usually done to the advantage of those using those positions. I also have a wave chart incorporated. In this case, it's a 5-cent wave. That means that price has to move by more than 5 cents in the opposite direction for a new wave to begin. And the wave is this red line that you can see on the chart. And it's the dynamic wave. Here's the wave size here. If I made it a 10-cent wave, you can see it says 10 cents now. And I click the button and it changes to a 10-cent wave, which means that price has to move by 10 cents or more in the opposite direction for the wave to create a new wave. And this can be made any size I like. A 20-cent wave or a 1-cent wave. Really what you want to do is find a wave size that fits the price action. Somewhere between 5 and 10 cents on this chart seems to be a good size. And then you can read the chart via the wave. You can see when buying is strong. This is the cumulative volume of each individual wave. So if the wave begins here and finishes here, this is the cumulative volume. This was a buying wave, an up wave, and it's showing you how much volume or how much effort or force was behind the buying in the market. You can see that there was a lot of effort put into this, and you can see how much ground price made on all that effort. And then in response, there was a single down bar, almost no selling pressure whatsoever. And then there was another up wave in response here, and then almost no selling pressure, just one down bar. Then demand reduced somewhat and price came back. But you can see that even though price came back fairly sharply, there wasn't a great deal of volume in it. It was only over 2 days, and volume didn't exceed the previous or the subsequent buying waves. And you can see here that short positions, daily short positions increased. Here, the price was being moderated by the use of short positions. At least to some extent, price was then brought back here, and those short positions were reflected in an increase in short interest. Then those short positions were covered because very quickly short interest went right back to where it was and was even lower than where it began. It began here and it ended up here. So they've covered even more short positions, and then a buy the offer situation takes place on an increase in volume. This is the cumulative volume here. No selling pressure, then another buying event takes place, the price moves up. Now prices come back. You can see the second day prices come down. Spreads narrowed considerably. Volume is still very high and well above the average. And so far today, price is back up to this level. Price is looking like this at the moment. So the market's buying today. So you can see how the chart's used. I'm looking for anomalies in daily short positions and short interest, short positions being held. There's very little doubt on this chart here since the 4th of June, short interest was just above 20 million when it began, and now short interest is about 10 million, almost exactly. So short interest has halved across this chart during this period of time, even though during at least this period of time, daily short positions have increased, and perhaps increased considerably. They'd be almost double from here to here, I'd say, just looking at it by eye. Twice as many daily short positions are being used. This is to moderate the price, to keep it from accelerating higher too quickly, for whatever reason. Now, if you're wondering, here is showing you the percentage of short positions being held short of the overall shares on interest. So 1% of the shares on interest are being held short on this stock up to the 8th of the 10th, which was last Friday. This is done on the Monday. Now this bar here, I think is a bit of an anomaly, or someone actually did go short here, although it's not reflected in the short interest. Sometimes it's best not to ask too many questions and just watch the response. That is a bit of an anomaly. It's way more daily short positions than any other short positions on this chart. So it's a little unusual. So hopefully you found that interesting. You can see the difference looking at a normal price and volume chart. Now this is ASX trading only, where this is ASX and Chi-X trading. There's very little difference really. You can see how much average volume has increased as prices gotten higher. That's the traders coming into the market. Volumes are significantly higher and rising at the moment. But overall, the trend is higher and it shows no signs of turning around at the moment and changing trend. There's no change in behaviour. If anything, there's further buying going on. There's little doubt that buying came in on this bar here, high volume, narrower spread than the previous bar. This bar gapped down. You can see daily short positions have increased, and then the response today looks like it's going to be a reasonable up bar. This is the level to watch now, and that would be $3.59. That's where any weakness that has been derived from these two bars, if there was any weakness at all, will be left behind and would be below the price action. From here up, price is free to move again. So that's my short chart. That's what I call it anyway. And you can see how I use it to try to identify anomalies between daily short positions and short interest. I remember Tom Williams saying, when he was a member of the private trading syndicate, they would at times sell some of the stock they held to moderate price movement, to enable them to buy further stock that was shaken out when price came back, or allowed them to buy the offer. He didn't use that term, but that's what he meant. It allowed them to bring price back a little so that they could then accumulate further. And I think that the modern version of doing that is not to sell stock you already hold so much as to use daily short positions to bring price back. You immediately cover and then buy the offer to accumulate further stock. And you can see that's probably what's happened here. Price has been brought back for a couple of days, and prior to that, just across here, the stock was moderated so that price didn't accelerate away too far. It was brought back to some extent. Quickly, the short positions were covered and then a buy the offer took place, all in effectively the same price level. And if that had taken place with price not coming back, price would likely have pushed significantly higher. Okay, that's my short chart, incorporating a wave chart as well. It's taken me a couple of years to develop this on Microsoft Excel, and I don't use it for every stock I look at. I use my normal charts to identify stocks, then I come over here to see if I can identify any further anomalies. If anyone wants to post this elsewhere, you can do. Thanks for your time. See ya.